The process of corporate tax filing in Singapore may be tricky for first-time business owners. Although the tax basis is the same in many other countries across the globe, the tax rate for the income of local and foreign firms in Singapore is just 17%. On top of that, Singapore offers a tax exemption plan for new ventures, except for companies whose primary pursuit is investment holding or are engaged in developing estate for investment, sale, or both. To qualify for the tax exemption plan, the new firm must meet these requisites. 1. The company is incorporated in Singapore. 2. The company is qualified as a Singaporean tax resident for the taxable year. And 3. The company's share capital is held openly by only 20 shareholders during the taxable period where all are individual shareholders. If not, at least a shareholder exists as a person owning 10% or more of the business ordinary shares. In this video, we will discuss the steps a firm must take note of in the process of corporate tax filing in Singapore. Firstly, who is obliged to pay corporate tax in Singapore? No matter the firm's tax residency status, it is obligated to pay Singapore's corporate tax as stated in the Income Tax Act. This tax is based on any taxable income gained by doing business in Singapore, plus foreign income sent into the country. Note that Singapore tax resident firms enjoy several welfares compared to non-tax resident firms. So, for tax purposes, what constitutes a Singapore company? Here's an itemized description. 1. The business entity is listed under the law in Singapore, in particular, the Companies Act 1967. 2. The company's name usually includes the terms limited or private limited. 3. The foreign company is registered in Singapore, including a foreign firm's branch. Note that a partnership or sole proprietorship business does not do corporate filing in Singapore. Finally, a company is deemed a tax resident of Singapore when its management and control are carried out in the country. Thus, the firm's board meetings take place in Singapore when making decisions on important matters. In addition, these companies enjoy the reliefs from the double taxation agreements that Singapore holds with treaty countries. Next, this is what foreign and local companies in Singapore need to know about corporate tax. The corporate tax rate in Singapore is 17%, which applies to new corporations' 3-year exemption system and special tax rebates. Note that the tax exemption for startups fosters entrepreneurship and does not apply to certain companies. On the other hand, existing businesses, such as investment holding firms and those undertaking property development, may avail themselves of the partial tax exemption. Under the Startup Tax Exemption Scheme of Singapore's 2018 budget, the exemptions are as follows: 75% on the initial SGD $100,000 of the normal chargeable income and 50% on the following SGD $100,000 of the normal chargeable income. This exemption scheme applies to qualifying companies only for their first 3 consecutive YAs. From the 4th YA onwards, companies can enjoy partial tax exemption. Visit the article linked in the description below for even more detailed tables with information about the corporate tax in Singapore all business owners must know. Next, let's move on to the filing and payment process for Singapore's corporate tax. Effective from April 11, 2021, companies in Singapore are obligated to use the government's digital facilities for businesses, known as G2B, using SingPass. Thus, all filing is to be done via the My Tax portal, and the step-by-step process of corporate tax filing in Singapore is as follows. Step 1. File the ECI or Estimated Chargeable Income form, unless your company is exempted. The filing and payment process for corporate taxes in Singapore generally starts by filing this form. First, the company provides the Inland Revenue Authority of Singapore with an estimated figure of its taxable income within a quarter of its financial year. All companies must file the ECI form within 3 months from their financial year end. The exception is when the company meets the requirements for the waiver on ECI filing. For example, if the firm's fiscal year end is March 31, 2021, then the deadline to file the ECI form is June 30, 2021, for the 2022 year of assessment. Step 2. Receive the Notice of Assessment from IRAS. After filing, IRAS will check the forms to facilitate their issuance of a Notice of Assessment. The Notice of Assessment provides a detailed report of the tax liabilities of the company. It also gives the company a chance to object to the tax assessment of IRAS if it wants to. Step 3. Pay the assessed corporate tax. All companies need to settle the tax amount within 30 days from the date of receipt of the Notice of Assessment unless qualified to pay by installment. Payment can be through various methods, such as internet banking, interbank gyro, telegraphic transfer, or check. Finally, this is what you need to know about the penalties involved in the process of corporate tax filing in Singapore. 1. Non-payment or late payment of corporate tax. Failure to settle the levied corporate tax as scheduled may result in a 5% penalty. On top of that, a 1% penalty compounds for every month the assessed tax remains outstanding. In some instances, IRAS may likewise take further legal or enforcement actions to collect the overdue tax. 2. Tax evasion. Tax evasion occurs when a taxpayer deliberately gives IRAS false or partial information to bring down their tax liability and obtain the wrong refund or tax credits. Note that Singapore regards tax evasion as a severe illegal offense. Thus, IRAS observes a sophisticated program to investigate cases of alleged tax evasion. This may consist of surprise visits or searches of home and company premises to find accounting records and relevant documents, in addition to obtaining or checking for information from banks and other financial institutions. Investigations of this kind may last from 15 months to 2 years. When proven that the ITR is incorrect so as to evade taxes, IRAS may impose any or a mix of the following: financial punishments of 400% at the maximum of the undercharged tax, fines of SGD $50,000 or below, or 5 years imprisonment or less. 3. Wrong tax filing. Where the ITR is filed incorrectly without the intention to avoid taxes, IRAS may impose any or a mix of the following: financial penalties to a maximum of 200% of undercharged tax, fines not exceeding SGD $5,000, or 3 years or less of imprisonment. Considering the severe penalties, it stands highly recommended that all companies should enlist the services of an expert tax firm. Companies can then ensure their corporate tax filing in Singapore and payments are timely and accurately prepared. If you're a local and foreign business owner with concerns about the process of corporate tax filing in Singapore, why not try out PREMIA TNC's professional services? Contact us for a free consultation on our corporate tax filing services today.